You're welcome back. This is Business Morning coming to you live from Channels Television. Don't forget you can send us your tweets at Biz Morning as we begin a conversation on the program. You can also later on watch this program on youtube.com/channelsweb. That's youtube.com/channelsweb. We're now been joined by Muda Yusuf, the Director General at the Lagos Chamber of Commerce and Industry. Good morning. Thank you for coming. I know that the issues around the closure of the RDAS is still being talked about in the news, and
Yes.
as the body that actually oversees commerce and industry in Lagos, how did this get to you? I know that you have a communique that actually talked about what you think how this would affect businesses in the country. But what do you think on a personal level about this development in the Forex market?
Well, the developments in the Forex market has been a major challenge for businesses across all sectors. In fact, you can liken it to a period of turbulence for most investors, particularly for those businesses that have high foreign exchange exposure. Many of them are suffering very serious dislocations as we speak. Because of the exchange rate shock. And of course, across all levels, businesses have been experiencing high increases in their cost of production and their operating costs. And even for the financial sector, what is happening also has the implication for the quality of loan assets, because there is a high risk that some of the loan assets, some of the loans that investors have with the banks, some of them may go bad because of the current situation. So it's a very challenging period. But for us in the Lagos Chamber of Commerce, the closure of RDAS was just like the climax of the crisis that has characterized the foreign exchange market. And given the event that led to the closure, particularly the huge disparity between the RDAS window, that is CBN RDAS window, the interbank market, and the parallel market, it was clear that the closure of RDAS will almost become inevitable. Because in spite of the assurances by the CBN governor that they will ensure that all genuine demands for foreign exchange will be met, in spite of all that, it was clear that there was no way they could sustain the pressure on RDAS. And even before then, a lot of companies were complaining because there was a circular that excluded some transactions from the RDAS window. We had finished goods, ICT, generators, invisibles, and some other items like that. Even items that were supposed to have access to the RDAS, at that time were not having the access. Raw materials, machineries, many of the requests were turned down by the CBN.
But the Central Bank
created a lot of confusion.
Well, it actually said that it will continue to support genuine requests from businesses from around the country. For those who want Forex, the Central Bank had said that they would support them. Of course, they have to present the fact that they need this money, that's the foreign exchange, to transact the businesses. Has that been coming from the Central Bank?
Well, the Central Bank has always said that. Even before the closure of RDAS, the CBN gave assurance that all genuine demands will be met, even at the RDAS window. But what was happening at that time was to the contrary, because they could not cope with the pressure. Now that
the demand was quite high.
It was quite high, particularly at that level. And because of the opportunities for arbitrage that existed at that market, there were a lot of abuses. Round tripping, speculative activities, all sorts of things were happening. And it was not something that the CBN could cope with, because it was something that was virtually taking us back to the era of the import license, where those who are those who had genuine needs for the foreign exchange were not getting it, but those who had influence were getting it. So that is what was happening at the RDAS market. So I think in a way it's a good thing, because for us it will provide some kind of level playing field, for investors in the economy. But altogether, the situation is putting a lot of burden on a lot of businesses, particularly businesses that had offshore financing. So as it is, we cannot afford to leave the investors just like that.
Okay.
There has to be measures to mitigate this current situation for businesses.
Before we go into the measures which you try to you actually prefer some solutions as to how the central bank can assist businesses that are captured under, not just under LCCI now, but every other business in the country. The issue of non-performing loans is just very critical at this point in time. For those who had secured financing from our banks, how are they coping with this development? How are the banks actually reacting to this, in relation to those who have actually secured some financing from the banks?
The banks are not comfortable with such situation any day. They are not comfortable, and I know that they will do whatever they can do within the scope of their own ability to see how they can support businesses to get out of this situation, because it's like a big hole. And I'm not sure whether the banks have the capacity solely to pull people out of this hole. That is why we felt that there has to be some intervention at the monetary policy level, at the fiscal policy level, to see how these companies can be assisted.
Okay.
Because, I mean, if you have a manufacturer, for instance, that has enjoyed a huge sums in foreign dollar-based import finance, because what has happened is that because of the high interest rate regime over the years, a lot of investors found it more convenient to source offshore funds because interest rates were quite low. So a lot of dollar-based import financing took place in the last couple of years, both to support their working capital and also for their capital equipment. So this development has turned out to be a major blow for those businesses. So between the banks, the monetary authorities, and the finance and the fiscal authorities, there has to be a concerted effort to see how we provide a kind of soft landing for businesses that fall into this category. And it is very important because the CBN severally has said they are concerned about job creation, they are concerned about economic development, they are concerned about inclusive growth. Unless something is done, to save some businesses from this challenge, we may not be able to achieve all these development objectives.
Have you had any level of conversation or meeting with the central bank as the authorities at the LCCI met with the central bank, trying to suggest, because one of the things you suggested at the LCCI is that there should be a lifeline for investors, for businesses in the country who have high level of exposure in the Forex market, 200 billion lifeline. Have you had any kind of conversation with the central bank?
Well, it is the beginning of the process of engagement with the CBN. This closure was just announced very recently. We are meeting to look at other modalities, but immediately we knew that there will be need for a lifeline for businesses that have high foreign exchange exposure. Otherwise, it could have all sorts of negative effects, both on the banking system and on the economy itself. So we are in the process. It's an advocacy engagement process. This is just the beginning of it. We'll communicate this. We'll try to engage, face to face with the CBN and put all these issues on the table, so that they could see how what can be. Because if you look at what is even happening now, the CBN is getting richer as a result of this devaluation and depreciation. Because if you are selling Forex at 168, or worst case scenario 170 in the official CBN window, and now you have closed the window and now selling at the interbank at 199. I think I was reading a report, I think by Financial Derivatives, which puts the likely surplus that will emerge from this development at over a trillion naira. So that should give some room to provide soft landing for sectors that are vulnerable in this condition.
But when you
so we'll engage them.
When you compare this with the fact that there will always be rising demand, now even if the central bank has a surplus of 1 trillion, 1 trillion naira, as a result of the differences between the RDAS window and the interbank, but the continuous demand for Forex, would that suffice? Would that actually meet the demand? While there could be more naira in value, okay, and the demand for naira, for dollar rather, is, or other currencies, not just the dollar, is still rising. To what extent do you think such differences would make?
No, you see, let's put it in proper context. When I talked about the CBN having more naira, I'm talking about it in the context of their capacity to support the vulnerable sectors of the economy through a kind of refinancing facility. Now, talking about the demand for Forex, it's a separate issue. Demand for Forex is also a function of the price. It's a function of the exchange rate. Now that exchange rate has depreciated or risen to 199 in the parallel market, is well over 200 naira to the dollar. All this will have a moderating effect on demand, because from elementary economics, when price rises, the demand normally drop. So the kind of pressure we had when we had the Aldous window, we are not likely to have that kind of pressure now, because at that time there are all sorts of components in the demand equation. There are those who are round tripping, they were exerting a lot of pressure on the market. There are those who are speculators. There are the rent seekers. There are people who are, going there to accelerate or fast track or, engage in process of capital flight. All those components of demand in the Forex market are likely to moderate significantly. So what we are likely to be seeing now are people who genuinely need the Forex to do business. So there will be a moderation in demand as a result of the depreciation and the devaluation that has taken place. So we'll not be able to compare the demand at 199 or 200 to the dollar to the demand at 170 or 168. Okay. The demand will moderate significantly.
Now, still talking about some of the measures you're preparing for the authorities and the financial market, you said that all critical raw materials and other imported inputs of manufacturing firms should henceforth attract zero import duty. How did you arrive to this at this suggestion? Going by the fact that at this point in time when Nigeria is trying to put up measures to increase revenues, how do you think the finance ministry, for instance, would take this recommendation in terms of zero COT on import duty?
Now, you see, the economy is not just about government getting revenue. Government has a developmental objective to ensure that the critical sectors of the economy did not go under. Government has a responsibility to ensure that we have an inclusive economy. Government has a responsibility to ensure that jobs are created. So when we talk about economic management, it's not just about looking at revenue, because that is one challenge the businesses have been facing. Okay. If you look at the regulatory agencies, NAFDAC, SON, customs, their emphasis is on revenue. And in doing so, they are hurting businesses seriously. They are, constraining the capacity of business to create jobs. We know the kind of unemployment that we are facing in this country. So this overemphasis on revenue is having a serious backlash on the larger objectives of growing the economy, on the larger objectives of creating jobs. So the point we are making about creating a soft landing for businesses, first let me start with the refinancing. The whole idea of the refinancing facility is that if you have businesses that have borrowed or that have done import finance through offshore finance in dollar-based, and that are suffering from, that are experiencing a serious shock as a result of this exchange rate adjustment, there is need to provide a lifeline for them. If you have a refinancing facility of a single-digit interest rate, for instance, of a longer tenure of about 15 years, and I know that the former governor of CBN had done similar things to salvage some sectors, So we are calling for something similar now to identify the sectors that are vulnerable, and we provide this facility for them so that the refinancing can be done from this pool of funds. You give them at a lower interest rate and a longer tenure, so that they have the capacity to absorb the shock and manage themselves out of this situation. It is very important because many of them are heavily indebted to the banks, particularly those of them that have high foreign exchange exposure. Now, coming back to the fiscal measures, which has to do with the import duty. Now, the exchange rate depreciation and devaluation means that the value of imports will increase in naira terms. And that will also mean that because import duty is a percentage of value. So whatever import duty you are paying in nominal terms will also increase. And you are dealing with an economy where you have high cost of funds, you have serious issues of purchasing power, you have challenges of smuggling and dumping, you have issues with all these regulatory agencies. If you really want businesses to continue to provide jobs, you have to create some measure of something to cushion the effect of all these problems. That is why we are suggesting that we should identify all the critical in this economy. Look at the critical, it doesn't have to be all their inputs, but you take them sector by sector. You take the cable industry, you take the tire industry, you take the steel industry. They are critical raw materials or inputs, and we waive duty on them so that they'll be able to cope with the challenges that we are facing at the moment, because it's a major challenge. This economy is largely import dependent, and there's a limit to which many businesses can sustain themselves through this turbulence if there is no form of intervention at the monetary level and at the fiscal level to see how we salvage the situation and make it possible for them to continue to sustain their businesses.
Okay, we hope that the turbulence is short-lived.
We hope.
Let's catch some breath, Muda Yusuf, the Director General of the Lagos Chamber of Commerce and Industry, as he's talking about the impacts of the closure of the hour-das, that the official window of the central bank at the Forex market, the impact of that move on businesses in the country. We'll go on a break. I'll be right back.